What's up everybody, Tom here with another video. In today's video, we'll be talking about why this chart and this break are the most important things for us to be looking at in the markets right now. We'll also be talking about our technical analysis levels for the Nasdaq, SP500, Tesla, Bitcoin, gold, and more. Boy, oh boy, was it wild on the markets yesterday. We had inflation concerns hitting the markets. Everything was down across the board. And of course, we saw that crypto crash brought on by a huge amount of liquidations, and of course the Elon news coming out that they would no longer accept Bitcoin. There's a lot going on in the market right now, and there's a lot of turmoil. Where to next? Stay tuned. All right, guys. Well, I wasn't kidding when I said nothing was safe yesterday. It really wasn't safe out there. Very little things went up. Basically, energy was kind of flat. Healthcare was kind of flat. And the rest, my goodness, look at the technology. Google down 3%, Microsoft down 3%, Apple down 2.5%, Amazon, Tesla, Nvidia. It really just was not safe out there in the large high quality tech stocks. When we go over to the indices, it's going to become very clear why. Let's have a look here. The Russell 2000 down 3.25%, Nasdaq 2.62%, and even the Dow Jones was down almost 2% with the SP 500 just underneath. When we look at the sectors, you'll see why. Only energy was positive yesterday. Everything else was down, led by consumer, discretionary, and XLK. Even materials got smashed with a 2.52% return, and utilities or consumer staples, often defensive components of the markets, even they were down. So it was a pretty broad sell-off brought on from those core CPI numbers. We saw a number that kind of points to heavy inflation. We saw the US 10-year start to move up, which is pretty sensitive for the Nasdaq, of course, in the markets, though we're still not too concerned about that unless it goes over 1.95. And yeah, the market just kind of fell through. I mean, it took a little while. We opened up in our live stream. Come join us 1.5 hours before New York Stock Exchange open today, and we'll be doing it again. Make sure to join us. It's going to be a crazy session, I'm sure. But yeah, it was basically just like that. We saw the market open up. It was holding that 41.20, and then through the session, it broke underneath, which would have definitely had some great day trading opportunities. We spoke about that as well. Let's now talk about what's happening on Thursdays. We're still in earnings. We have Alibaba Group, Disney after the hours, Airbnb. I mean, I'm sure a lot of these companies probably almost don't want to do earnings into a market that's a bloodbath like this. But that is what's coming out, and we'll have to see how that plays. Now, of course, some people are claiming super sale in big tech as high quality stocks become slightly cheaper. Now, these are the kind of news articles that we see flying around, and it's pretty normal for this to occur, at least initially. This doesn't mean buy or sell. It's just interesting to see that the articles are coming out, oh, all of a sudden there's a sale with the 3% off on top of the other couple of percentages. Look, I do think big tech has some opportunity in it, and I think that you should be looking at that type of sector. But just remember that just because an article tells you so, usually it's like the smoke and daggers on these articles. Another thing is, of course, the bears are now in control of the market. We'll take a look at our technical analysis levels and we'll show you why that could be so. But just remember, bears in this current market, they cannot control the market for long. So we're going to talk about the key levels that we're looking at throughout this video. Another thing that I think needs to be brought up is, of course, Tesla stock and the Bitcoin drop after yesterday's Elon Musk announcement. Now, we did see two things happen. One, $2 billion worth of liquidation of futures contracts in Bitcoin market. That certainly bashed them round. The other thing is, I think on Thursday this week, we have a huge amount of expiry on Bitcoin contracts, which is causing even further volatility here. But then on top of that, of course, Musk said car sales with crypto will be halted due to energy usage of mining. Look, I'm not really sure why he's suddenly coming out and saying something like this. I'll let you guys discuss it in the comments below. I will do a little bit of research into it, but realistically, this is not new. Crypto is terrible for the environment in terms of proof of work instead of proof of stake. Maybe Bitcoin will move over, I'm not sure. But basically, yeah, proof of work is a disaster for the environment. That's my opinion. You may disagree with me, but I think it's ridiculous, and I'd love to see it move over to proof of stake instead. Let's now go over to Q1 earnings beat data, and of course, that also is why Ethereum is doing so well with the Ethereum 2.0 options coming through soon. Now, Q1 beat data still sitting around that 80%, so it's not like the earnings is bad. But when we go into the TA, you'll notice straight away, look at the volatility index here, guys. boy, oh boy, what a massive spike in volatility, 27.6. We were having a webinar yesterday where we were thinking about 30 by the end of the week, and I tell you what, it almost got there in one day. So volatility is certainly back in town. It looks to be sustaining. What I'll be doing is actually looking at the weekly close here to see whether it can weekly close above 20, because when it does, often we get that further sustained kind of bullish momentum. And this doesn't surprise me at all. We've been talking about how we thought that May would be a weak month based on that 2009, 2010 analysis, and it makes sense. Now, will it be a full-on crash? I think it's going to be more of a correction, halt, movement sideways for some time with a bullish movement later on through the year. And we'll go through that more on the channel as we get into it. But yes, volatility certainly spiked. I'm not sure if we'll hold a 27.6. I think this volatility index will come back a little bit tomorrow, and I'll explain why when we get into the TA of the SP 500 shortly. So what happened? Yesterday, we had the core CPI news out. It was big, and it was completely different from what the expectation was. This is causing concerns about inflation. Then all of a sudden, we saw the dollar index, which had broke out during yesterday's session. We talked about how this closure up here was going to mean dollar strength. It blasted through, and look how fast it went. Very quick trade here. Really nice kind of bottom pattern structure. So we had our kind of double bottom down here. You have a little bit of noise in there, but any good high quality stop loss would have held you, and bang, straight up. Now, I think it's kind of hit a level where it's going to find some resistance now, and I do think there'll be some sell through. We can see here previous supports over here on the left, and also the 90-80. It's just the zone that will stop it. We go through the daily as well. It's going to make sense. It's trying to catch back to that daily 20. Now, when it hits the daily 20 or the daily 20 meets it, I'd expect the dollar index to have a little bit of a hover. So this initial impulse move, I don't think really shows us any more about the market other than it was getting a little bit ahead of itself with the sell-off, and this core CPI news pushes it back up. Now, what did that do? It bashed gold around a little bit. So gold hit our 1825 level. It then went up to 1842. It then started coiling or hovering within a zone, and it sold off to the 50 exponential here. And you can see that, the sell-off was decent, and it's finding some support. Look, I'm not sure when gold next goes on its rally. Of course, I've got this 1842 pegged. Until we get up until that level, I'm not really too interested in gold again, but I think that if we break through here, then we're going to go to something like an 1875. So I'm very interested in a break of the 1842, but while it stays around in this kind of consolidation after that initial great move up from the 1700, 1600 zones, that's what I'm not going to be doing. I'm not going to be really getting too involved in here unless it maybe comes back down to this 1800, finds some critical support, and then buys off. So something like a pullback to the 1800, lightning bolt formation, that's going to be a strong trade. And same with silver. Silver needs to get past 28. Right now, it's stuck in the middle of nowhere land at 27.14. Have a quick look here. You can see what I mean. Maybe it comes back down to like 26.50. Find some support, or just kind of hovers around here for some time. I'm not really too interested in silver until the thing breaks through 28, and then I think it's back on and looking really great. Let's move over to Bitcoin, because look at this flash crash that occurred. Wow, wow, wow. It just shows you how much action can happen in the markets in crypto and how fast it can occur. So since yesterday, we actually saw crypto dump 20%. That's right, 20% on Bitcoin in only a few hours due to Elon, the liquidation, everything else that occurred. It got straight through the support, and our expectation was that the market would go down for the distance. So it actually went a little bit further than that and instantly rebounded. Because of the nature of the news, there's going to be buying pressure. What I would expect now is the market actually recovers back to this 20 exponential moving average here on the 1 hour. And then the previous supports of this channel act as some form of resistance. Possibly we have like a double dip here, or at least some kind of reversal. And if it gets back into the range up here, then everything's all good. But that certainly shocked the markets, and all cryptocurrencies were down, now all recovering quite a lot of percentage as we record this video. So it was pretty shocking, but I do think it was a shock more than a full-on crash that's going to be led by further selling. I feel like a recovery is coming here, and then it's going to come back up, find resistance, sell off, then go back up. And at this point here, there'll be a lot of buyers once it does something like this. The lightning bolt into the next move. Look at this bullish hammer here on the 1 hour. Any completion up here is going to push it back to this 53 area. I really feel pretty strongly that's not bad TA. Let's now move over to Tesla and the rest of the markets. So Tesla got through the 600 yesterday, closed below. This is probably the most concerning chart in the markets right now. If you think about what this means, is I'm looking at the all-important weekly here, because I think if weekly Tesla gets below 600 and closes, this opens up what we talked about yesterday, which is that 450 zone. Could Tesla go down to 450? A lot of you in the comment section are having a battle on this one. I tend to think this is very possible. 450 is very, very possible indeed, all the way back into this zone here. And if it comes back here, I think this is definitely a great opportunity for people to maybe get a little bit more optimistic on the pricing for Tesla. And of course, I think Cathie Wood and others will also buy huge amounts in this area. So if Tesla keeps falling through, I'm looking at the weekly 600 breach. If that occurs, 500, 550, 450, they all become open levels. So to really illustrate how important it is that the market finds some support right now, I'm going to use AMD. And I'm going to use AMD because AMD is a stock that is right on the support. Here is the support for AMD right around that 74 zone. It closed yesterday, $74.64. But guys, take a look at this level. Imagine if this level is breached. This level's never been breached with the closure. Now, if that breach happens, there is no support on this stock until $60. So until right down here around $58, $60, there's nothing here for AMD. And in fact, it kind of almost looks like a head and shoulders pattern with the left shoulder, head, and right shoulder. So this is happening on a lot of stocks right now in the tech market. And you will see that if these things breach, probably this is an early warning sign that the Nasdaq's going to go even lower. And I just want to bring it up before we go into the Nasdaq analysis. Here's the Nasdaq right now. This is what it's doing. It's recovering a little bit in the futures market. You'll see it hit kind of like 13,000, bounced off it. It's now going to have to contend with 13,100 and see whether it can breach that. And if it breaches that, then it goes to 13.2. And if it breaches that, then it goes back up to 13.4. I don't think the bulls are back in control of the Nasdaq until they get above 13,400. I maintain the same discussion that we had yesterday, which is all that's happening here is we've got standard pullbacks, and then that 13,400 will be where the bulls remain control. So if we think about this from a movement down perspective, we take our first movement down, which is from the peak to the trough. We then take our second movement down. It's pretty similar sized. If we take our third movement down, you know, the sad thing about it is it proofs perfectly with the previous support, the 12.7. So if we're taking those levels and we're thinking this is what's going to happen, guess what? It kind of proofs to the idea that the bears are going to be able to get this thing down 300 more points in the third leg. So the first leg distance, the second leg distance, just again so you can see it, and then the third leg distance. Oh my goodness, it's almost too good to be true, yeah? And that usually means it stops a little bit earlier, so maybe like a 12.8. It's gotten very close. We've theorized this all week in the live streams. We've talked about this concept, and I think if it's going to happen, it's going to happen very fast. So probably in the Thursday session, with Friday session being positive, something like that would be occurring. So very compelling stuff here on the US 100. If we go over to the QQQ, it's the exact same thing. Think about the movements that have occurred here. Again, you take your trend line out, take the distance, think about the next movement here, do the pullback. The pullback happens up into this area, and then we take the third distance and see how it proofs right down again to the exact same level. So as long as the real market and the futures market are aligning pretty closely, it's pretty good technical analysis. And that's one of the ways that I like to proof things in my thought process between the bulls and the bears. Just remember, the bear side is way harder than the bull side. And I still don't think we're going into a crash. I think we're going into a correction that pulls us back to the mean reversion. So to talk about mean reversion, let's go to the SP 500. Here is the most important chart to be looking at right now. Daily got through the 41.20. Of course, 41.20 support was the key zone to show us the bears were in control. Now, where is the level that we expect it to find first support at? It's down here. So we're basically looking at a 39.57, around 100 and a bit points away from current price. Based on yesterday's closure, this is the type of thing that you're looking at. And if we go into a 1 hour chart, what you're going to notice is there was a very easy trade yesterday. It was just here. My goodness, so easy. So you got a 41,113 close on the 1 hour. That's going to be a confirmation that we've gotten under the 41.20. Why can you use this? Because no other 1 hour close breached this level. We wicked through, but we never close breached. So there was easy selling here on the S&P 500. Every single hour after that was negative. And what I kind of expect from this market is a recovery, hitting the 41.20 from the bottom up, finding resistance, and then selling off to something like the 39.60. That would make a lot of sense. For the bulls to regain control, well, they just need to push it back above 41.20. But I think the bears have got it here to the levels of at least the 39.50. Now, if we get under and breach this level, we'll be talking about it here on the channel. But at this stage, this is the most logical conclusion. We've always stuck with this kind of zone, and it just makes a ton of sense in what we're seeing in the price action, what we're seeing in the sentiment, and of course that sell in May kind of concept. If we go back, which we will be doing tomorrow in tomorrow's video, so make sure to subscribe, hit that like button if you enjoy this video, guys. We'll be going back and having a look at the May analysis from 2010 into now and just seeing the similarities and the overlay between both markets, because it's fantastic stuff when you can put logical solutions behind or logical statistics behind your analysis. We'll see you 1.5 hours early before the New York session. It's going to be absolute fire today. We've got big earnings from Alibaba, we've got big earnings, Airbnb, Walt Disney, etc. And we are starting to see some great tech stocks come into some fantastic zones. So will it be the time to buy? Let's take a look in tomorrow's session. Bye for now.